Hello, I'm your host, Effie Pilarinu, and today I'm delighted to have with us Ronit Ghose, who doesn't need introduction to my audience, but for anyone that doesn't know him, he is running the Future of Finance team at Citi Institute, which is the thought leadership unit. He is a seasoned banker, I would say, whatever that means. I hope you take it as a compliment, Ronit, and thank you for being with us today.
Thank you. Thank you for having me, Effie. I look forward to this conversation.
And I have to mention, I mean, I could mention many things about your
Yeah.
background, but I think where I want to add is your new book, The Future of Money, which is a fantastic book. We covered it at the Fintech Book Club. It was really an amazing, enjoyable read. It reminded me a bit like going around the world. You took us really on a wonderful tour, where money is coming from banking and the
Yeah.
future.
Uh,
So it's a
Thank
fantastic.
you. Thank you so much for your kind words today and also for the FinTech Book Club interview we did a few months ago and all the support you give me on the Future Money book and more. And look forward to seeing you in person soon.
Yes, yeah.
Yeah.
So today I want to focus on the recent summit
Hmm.
of the Citi Institute Future of Finance Forum
Hmm.
that was held in London in the end of June. And I want to start with, I can imagine, of course, AI and stablecoins were main topics. What other topics were part of the agenda and part of the focus?
Sure. So the City Institute Future of Finance Forum is the name of the event. It's been running for 12 years now. We originally began it and it was called the Digital Money Symposium. Digital money became a very generic word, so we wanted to make it more fresh and alive. And it also became very associated with crypto, the term. So we thought Future of Finance Forum was a more comprehensive name. And we really talked a lot about AI and stablecoins and digital assets, as you can imagine. The two big trends for this year on finance in terms of new future of finance type topics is obviously AI and tokenization, stablecoins. But we also talked about quantum, post-quantum cryptography from a safety perspective, because obviously technology is moving so fast, compute power is moving so fast that there's a real risk of Q day or quantum day arriving faster than expected. Now, it's very hard to predict when it will exactly be, but the probability or the risk that it could be in the next few years is not 0%. And if it's a non-zero number, the severity of the downside is so big that this is a big issue that state level actors, both for good reasons and bad reasons, are focusing on. And of course, all the big banks and all the big companies. So we talked about quantum. Another thing we talked about was private markets, not a new theme, but it's an evolving theme. Private markets. So the growth of what used to be called alternative assets, so venture capital, PE, and private markets as they exist today, but also the digital version. So tokenization as an alternative. So lots of sort of discussion around that. And lastly, like kind of linked to AI, but a more broad question about trust and identity. In a world where AI has already broken our ability to trust voice as a signifier, as you know, this is my voice. And a world where video is rapidly improving in quality, AI video, how do you know that this is me? That
Yeah.
this is not a synthetic Ronit or an avatar?
Additional issues in banking like onboarding and all
Exactly,
that, they
exactly.
become new challenges. I guess I
Yeah,
always think, Ronit, that if we look back more than a decade or 2 decades,
yeah.
excitement of digital banking and digital finance was, far away, but it was the beginning of the cycle. I think that everybody underestimated the cybersecurity consequences of the digitalization that we have already accomplished. And now with
Hmm.
this new AI tech cycle and the consequences of all these frauds and the trust
Hmm.
issue is even bigger and different qualitatively, right?
Yeah, totally. I mean, there's what is it, $1 trillion plus of fraud every year, and increasing amount of that, small but increasing, is AI driven. I can imagine in half a dozen years it'll be largely AI driven. Though, of course, the technology angle of the fraud isn't what causes the problem. That's a tool. The technology, whether it's AI or other, is exploiting our human weaknesses. So in the workplace, it's usually a hierarchy problem, as in your boss calls you from a head office location or just in the same location as you, and you basically follow the instructions of your superior rather than necessarily the no, the code of conduct or the best practice or the process that's in your handbook, in your workflow. You override that because your boss says you do this. Or in personal life, or as a client, or in family life, emotion takes over. You hear your spouse or your child on the phone in distress,
Yep.
emotion overrides reason. And it's the same in as a user. When you get a call and it pretends to be your bank, you and I, if you won't panic, but many people, when they get a call from their bank or from the police, an authority figure
Yes.
like the boss, the authority figure, we tend
Or a
to
tax authority, for example.
comply. Exactly, tax. Yeah, yeah, yeah. You
Tax
over comply.
authority.
You go, oh, yeah, this is the government calling or the bank calling. I need to give them this information. And that's it's the human layer that gets exploited.
Yeah, yeah. What stood out at the forum regarding the transition from AI, if you want, experimentation, the pilots, to
Hmm.
really an enterprise-wide adoption? Because I guess, as you said, this is an annual event. I'm sure the
Yeah.
the evolution of the themes were different, but especially in this area of
Hmm.
implementation versus enterprise adoption. Is there something that really stood out?
Oh, absolutely. That's the big picture. We had a panel actually called AI from Wow to How. It's all about how do we implement AI. Whereas a year ago or 2 years ago, in 2023 or 2024, you could go, whoa, this is amazing, or this generative AI can do all
Potential.
of these things. And it was a little bit like theater. Whereas now I wouldn't say ROI focused necessarily in terms of show me the financial return. Now it's more practically, I mean, that's obviously there, but it's more practically focused about don't come and tell me, wow, this is amazing. Tell me, how do I implement this? What does it change? And there was a lot of focus in both the panel on this topic and also the roundtables we did in the morning on implementation. And what surprised me in the last 12 months is how a lot of non-financial actors, so corporate clients, corporate players, and also obviously consumer users of AI have really begun using it. It's not a question of, it's a bit like students in universities or school. No one's saying to use it or not. I mean, everyone's using it. So, and your employees are also using it, sometimes before the company mandates rules. And so this creates this gray area or transition risk area. But it's all very much focused on implementation. Now, so there's still obviously concerns around hype and overselling. Like, there are certain things that it doesn't automatically mean that overnight you're going to have 50% less call center staff or you're going to have 50% less coders. But obviously, the original pitches that often come in for either Gen AI or agentic AI is you'll need, you know, X% less people. And the challenge, obviously, that institutions, incumbent banks, and large corporates are wrestling with is that it's a transition or a transformation project, and those take time, particularly in regulated industries. I imagine, and we discussed this in our event, for smaller companies, for startups and scale ups, this is a big opportunity because if you have 10 people, you can build a business now that you would need 100 for. Just like in the past, before cloud, you could do with $10 million, maybe what you'd need an upfront investment of $50 million, and you'd have variable costs. So just like cloud transformed the startup landscape, AWS or Azure or Google Cloud became, I think their marketing line is, we're a co-founder because they just provide so much scalability. AI does the same for startups and scale up. So I think that was one really interesting kind of area of conversation for incumbents. it's a longer process transition, and that of course creates competition risks. There's also a specific point that we discussed a lot in the event, including in the wealth management panel. This is not just about swapping out one person with one AI bot or AI agent. This is about instead of maybe having 10 people doing 10 units of work or 10 people having 1,000 clients, 10 advisors, those 10 people can have 1,000 clients but service them better. It may
So
not be that they're servicing more clients, but what you're doing is you're preventing the risk of these clients waking up one day, not obviously collectively, but metaphorically going, why do I have my advisor at ABC expensive wealth management company based in London or New York or Zurich or Geneva? Why am I paying this wealth advisory firm tens or hundreds of thousands, often hundreds of thousands of dollars to manage my money when I'm not having really good advice? So what we've seen, and we had a whole panel in the future of wealth, is we've seen wealth advisory firms, both very traditional private banks and new emerging wealth firms, embrace AI as an augmentation, as an assistant, as a live real-time
that's
assistant to their
interesting because
advisors.
yeah, because it has been traditionally behind every other
Yeah,
subsector, right, in the digitalization process because, more conservative,
high touch.
high touch and, like that. Then and
Mm.
now you're telling me that they are jumping on the bandwagon equally.
And in some cases, some of the and this is, we discussed at the conference, but even before, and in our AI report in January, the Agentic AI report my team and I at Citi Institute published, we had input from both from Switzerland, everywhere I know you spend time, and the US and Japan and other places. But, Swiss AI startups
Yes.
selling successfully to very traditional companies in Geneva and Zurich,
Yeah.
and not just doing proof of concepts in production.
Yeah, yeah,
So
we've
you,
had a major funding also spree here in Switzerland that is not common, is not
mm,
usual, that are AI service providers to private banks, and as you said, that's not a common thing. It's
mm.
quite surprising, and they're going global, which is also not the usual way. So what was personalization and open finance discussed openly, or was it intertwined with AI and on-chain finance? Because I guess it's all connected. It's a question at what level you discuss it. Because in my mind, digital assets, stable coins, all the tokenization, that's on-chain finance. It is really about
Mm.
open finance in a, if you frame it like that.
Yeah.
And then personalization. How was it discussed? Was it discussed, or there was more focus on specific use cases and less on these big trends?
There was some, I think, implicit in the promise of AI for users and for institutions providing financial services is this ability to personalize, even hyper personalize. And I think in the mass market wealth category, so the mass affluent category, and then just in general in consumer and mass finance, this is the real promise of AI. If you have 100 million with the bank, they're gonna give you good service. If you have 100 Swiss francs or pounds or dollars, you're just going to be not getting any kind of real service, right? Now, a lot of people, the median amount of money held in a bank is any depending on the institution. If it's a digital bank, fintech, to a traditional bank in the UK and the US, is anywhere between as low as $1,000 to $10,000. The traditional institutions are more like 10,000. The newbies, actually some of these newbies are now 10 years plus old. It's more like $1,000 or give or take, plus or minus. Those kind of balances typically don't get personalized attention because it doesn't make economic sense in a human-based
Yep.
advisor model. You can, with AI, give them much more tailored service. Now, this is not new. Digitally native players have been doing it for a few years. It's been almost a decade that I've been watching Chinese fintechs that, of course, FU know well, have been doing this. It's a decade old now. WeBank, MyBank offering to their SME clients, their digital SME clients, credit or
Yeah.
services based on data because they have all the data. They can see all the flows. Traditional banks would not have done that in the past. So I don't think open banking or open finance or personalization was specifically a topic. Like we didn't have a panel on it, but it was it was in everything we were discussing.
Yeah. Were there, back to blockchain and finance,
Yeah.
on-chain finance,
Yeah.
so much going on there, right? With
Yeah.
layer two launches, all these integrations and partnerships and collaborations, scaled
Mm.
up fintechs. Oh, I must say, and I don't know if you agree, that still there's a silo between what we call fintech finance and the crypto world, whether it's
Sure.
for events or not. But were there any specific blockchain applications that were discussed at the forum that you believe will become more
Mm.
mainstream, especially at these layer one or layer two?
So one big area of discussion was stablecoins. That was probably the biggest area of digital asset related discussion. I hosted a fireside chat with Caroline Pham. Caroline's an old colleague of mine and has been this year acting chairman of the CFTC US regulator. And we had a long conversation, which is available online. Well, long, 20 minutes, 25 minutes, 25-minute conversation, largely focused on stablecoins and digital assets. We had another panel about stablecoins, tokenized deposits, and CBDCs. It was pretty intense discussions around what's the right form factor. But stablecoins in a way is the bridge between what people call TradFi and traditional financial services and the digital asset world, and also fintech. Fintechs are rushing ahead with stablecoin offers, or they're planning it, as are payment companies. So you've seen lots of announcements from Stripe and others. So in a way, stablecoins kind of knit together the world of fintech, crypto, digital assets, TradFi, the banks. Uh,
Yeah.
it's like the universal translator
Yeah,
or
yeah,
connector.
yeah. Suddenly we have a connector. It's a bit like a general purpose technology. We could say, in a loose
Yeah.
sense. So, are you optimistic about the pace of digital asset adoption in traditional finance? I mean, we are optimistic with stable coins, I guess. We're seeing
Hmm.
that whether we like it or not, with all there's different points of view depending on whether you live in the developed world, in emerging markets, whether you like
Yeah.
the regulations that are coming out from different
Yeah.
jurisdictions. There's a lot of diverse opinions, but overall, are you optimistic in terms of the adoption, or you think that it will be slower than expected? That there will be issues. What is the sentiment that you have personally and from the crowdsourced, if you want, insights from the forum?
As I said, it was all over the forum. Now, short answer is yes, I'm optimistic, or I rather to rephrase it, I'd say I expect a lot of work and development, not just POC work, but production work happening in this space from the fintechs, from the payment companies, from the banks, from the crypto native companies. And the dam has broken, so to speak. You can't put the dam back again. And so this huge amount of water from the reservoir is just flooding out. And this is an unstoppable trend. Now, that said, I don't think stablecoins is an answer for every question. And I do believe that my stablecoin friends who are spending all their time on stablecoins, or my crypto friends, not all of them, but some of them, it's a new product or it's a new project. And when you sell a new project, you raise capital. And when you raise capital, you tend to hype up the benefits. So there's a hype cycle going on. Many of these projects will fail. Many use cases today do not necessarily need stablecoins. I am doing this now in Dubai, coming to just before I fly off on holiday from in Dubai. I can move money 24/7 between the banks.
Yeah, yeah,
That's a limit, but I can do that 24/7, instantaneous. And that is true of 80 or 90 countries now. So if you're moving small amounts of money, tens of thousands of dollars, of up to usually 10, 20, $30,000, depending on the country, 80 to 90 countries have real-time domestic payments. Cross-border payments, yes, complex, can be pricey. Merchants don't often get paid. It's often T plus one or T plus three, or in some countries, it can even be T plus end of the month. So there are a lot of things that can be done better with stablecoins, but this is not the answer to everything. And there's the risk that we, with stablecoins, like we've done on digital assets, say this solves everything.
Yeah, and
It doesn't.
of course, the access to dollars in countries where there's
Yeah.
a shortage of supply in emerging markets. Uh,
Yeah.
there's no doubt about that. Ronit, on that note, I want to close our discussion and thank you so much for sharing these insights. And time flies, and I'm sure that
Yeah.
next year at the this forum we will have a lot of progress on the same topics and
Mm.
maybe new topics.
It'll be it'll be interesting to see what we talk about next year. But thank you so much for having me, Effie, on this session of your podcast. And let's catch up soon.
Thank you so much.